Audio morning brief for the U.S. stock market. It's August 10th and it's 8:37 a.m. Eastern Time. I'm Rich pausing for Critical Point. Didn't see enough change in charts here, so I'm going to just give you a audio update here in the stock market and some of the outside markets. However, something that occurred in gold has led me to believe I should do a quick little free video gold update. Anyways, let's go with the stock market here. 5-day average for the September mini S&P 500 futures, which is our proxy for the entire stock market. You want to watch that average. It's around 44.19. Remember, that's a live average. It's fluctuating during the day. I think that's support. I think that'll turn out to be a buy level, but I would be a little concerned if they dip it below it, that it's just going to snap back. However, the 5-day stochastic indicator is overbought, rolling over, warning it is time to consider the stock market can back off some. And as it turns out, the model is looking for a level 3 intramonth or monthly type top. Occurs once or twice a month, mostly once. So it can lead to the most important downswing during a month. It's how we do business. You can find it in all the liquid markets. Now, that level 3 downtrend, I don't think it's got a lot of downside potential, but we do have to consider that we may see a dip to maybe 43.95 would actually be a normal level 3 downswing. I don't think it'll go that low. I just wonder if it'll even work to the downside. I wonder if the market is just slowing down here, consolidating. There's a lack of sellers. It's still a strong market. And then when that level 3 bottoms, it's like people are going to wake up that, you know what, they never sold. We better hurry up and buy this. And then they chase the ask price, and the next thing you know, we got a record high here. So you see those kind of patterns where a market refuses to come down into a bottom, and then when that bottom is finally in place, it can actually speed higher. It's like it wakes up to the fact, boy, this market is really strong. In addition, when it refuses to go down, it's usually very limited upside. It's like the market is partially respecting that cyclical downturn, that pattern that we're working with. Okay, now, on the upside, I think this market is worth 44.54 to 44.76 this week on into next week. Maybe it can take a little longer than I think. And that's just one stair-stepping type target. We have targets way up into the 4,500s, 4,600s here for this year, even on into next year. Yesterday, I heard of a major bank making a comment that they think the market would be at 5,000 or higher by the end of next year. So they're just flat out bullish that long. Now, I could see that when we actually get a 7 to 10% drop next year for that minor long-term cyclical downturn, what I would call a bear market, but others may not. And yet it could be brief, and then it just rebounds on into the close of the year. And who knows, maybe it could be at record highs like they stated. Okay, sorry for going so long-term when this is supposed to be just a near-term update. Okay, so what else have I got for you? Giving you the potential downside for a level 3 swing. The level 3 downtrend should be over by early next week, I believe. It's just a matter, has it begun or not? When we look at the intra-week swings that sometimes occur so fast that they're actually intraday, the level 4 swings, which we call very short-term, basically the market should top today and be down in tomorrow. And what we can't tell you, has it already topped? And when I say tomorrow, it can bottom an overnight market, so it doesn't really have to stay down that long. It's possible the market bounces today and then goes down. Not a lot of help from that level 4. I can see it, I understand it, but I can see multiple scenarios within a certain time frame and certain parameters, so there's just nothing here of that confidence. It acts like the market is just resting. It doesn't know what to do. It broke to another record high, and now it's resting. And my thoughts, as long as the supply doesn't pick up, I think there's still more demand. And I think we're just going to put this stock market higher and higher and higher and just keep working at it this month. And I just don't see the negative news out there that can really drive this down significantly. However, I'm going to discuss some alternate forecasts when our September fluctuation could be more important than I thought, and the November-December fluctuation may not be as important as I thought. I will discuss these moving forward here, specifically in the weekly update that will come out Friday or over the weekend. All right, other than that, 2 thumbs up still for this market. All right, in the bond market, I see that if we can get a 1-week positive reversal, you bet in prices, you better call at a level 2 and level 1 bottom, and therefore it would be a top in interest rates. Okay, and I do see that they can push bonds higher a little later. Now the dollar has bottomed for level 2, and I forget now whether it's level 1. But it looks like the dollar can now rally into late September to early October. So if you feel as though you've already missed out some of it, you could still probe the upside of the dollar here because it can rally all the way into late September to early October. Bitcoin seems to be rallying with the dollar, so there again I keep thinking Bitcoin has nothing to do with anything. It's just a money market is all it is. Really doesn't have the fundamentals there. Nevertheless, it's probably here forever, and we'll move forward. We should start looking for level 2, level 1 top in Bitcoin now in the next few weeks, but currently no sign of a top. Trend is up. Crude oil may have just put in a double bottom, and we may still see that we're wrong and early, and crude oil is going higher into the fall months. But now relative to this new stock market forecast that I'll discuss Friday or the weekend, and the idea that seems to be a positive correlation of oil to stocks, I think I still want to give it a chance here of what we've been discussing for a recent top. And I do think commodities in general are going to continue to roll over and move lower into next year. And I'm probably in weekly updates for commodities and the stock market will show a video, a chart of where I'm calling long-term tops in commodities. Commodity indexes, the major ones. NASDAQ versus the S&P 500 ratio, I think it's ready to move higher, but I think it's going to be a struggle. I think the S&P 500 will keep up with it. I think there'll be moments where the S&P 500 will rally faster than NASDAQ, but it is possible the overall trend over the next 30 days or 40 days may be favoring the NASDAQ a little bit more than the S&P 500. I'd rather see the S&P 500 really wake up here, push higher. And I don't know what to think of the Russell 2000 and the S&P 500. It's like it's ready to bounce that ratio, meaning Russell 2000 stock should outperform, but I'm not seeing any sign of a bottom or movement yet. All right, how about the gold market? I'm going to try to do a little video, and probably I'm going to just make it free. I wrote last week, I think it was, that, and then of course I did a video, and then I updated you, the subscribers, on this. I really think that the violation of a March low of this year would be a sign it's going to be difficult for gold to make record highs over the next 5 to 7 years. I think it's in a bear market, that it would be in a bear market, but the problem is it may not be one that's easy to trade. It may not be serious. It could be more range bound, and that's why I prefer, I think the best forecast, safest, most conservative forecast is that it would just be difficult to pound out record highs, or they would be very unsustainable, okay? And so, lo and behold, I no more wrote about this last week, and the gold market started down immediately and dropped sharply. It dropped sharply this week and violated in the futures the March low. Now, that's my chart that's already on the December. It's already left the August, and the problem is, are there other charts out there to encourage traders that no, it really didn't happen? It really did not break to a new low. Well, at any rate, my chart is now saying I got to be a long-term bear gold, and maybe for 5 to 7 years, believe it or not. And this sends a message that inflation is not going to be that strong, not going to be that important, and or interest rates are going to be relatively high relative to inflation, but I don't think that means high enough to hurt the economy and hurt business. It's not going to be something historical, okay? So it could be those kind of combinations and some fuzziness there. Now, the problem is that the gold fund, GLD, would have to trade below 157.13 to wind up doing the same as what just occurred in the futures. So the futures are leading the cash market down. I did notice 2 gaps down in that fund, daily gaps. That's a very bearish sign. On the other hand, some people would say, well, once you get 2 gaps, though, that could be exhaustion that's about over, and you really you have not violated that March low. So the cash market is following the futures. That's the next thing I need really to be long-term bearish. It's possible the futures made an error and would sucker me in, if you will, of being a long-term bear in gold. So let's keep an eye on that. So we want the violation in the futures on my chart was 1673.30 per ounce. And I think the next step is I need that gold fund to trade below 157.13. So keep an eye on that. And even if I get that and I can say, okay, we should be long-term bearish gold, the downside could be very, very limited. It could be they're just for years now being a broken up, choppy range trade. It could even pound out, I suppose, a brief record high and then go back to range trade. But what it would send a signal is it might be difficult for gold to rally until near the end of this decade when the economy peaks. And by the way, I will put out a video for just the subscribers, so I'll lock it up. I've made a breakthrough after 20 years of pondering where is a super cycle top in the stock market and how that'll correlate with a super cycle top for the economy. And I think I got some insight for you. Finally got off the fence yesterday and said I'm going to go with this specific forecast until proven wrong. And that may be years from now. At any rate, I'll see if I can update you on that separately here maybe. And then, of course, it's something we will be discussing in future weekly updates. All right, I think I've given you quite a bit to follow. Sorry if these things aren't short enough on a daily basis. Maybe I should talk only of the stock market. Anyways, I just thought I'd throw in all this other information here where we're going. And I'm still giving 2 thumbs up on the stock market for this month. Past results are not necessarily indicative of future results. Have a great day, and I'll talk to you soon.